A new flavor for your ear. Epic Spotlight. Putting the spotlight on positive goings on the real people that have chosen a real path. The who's, the whys, and the hows are being shared and given to you.
And we're back, and we got another one. But before we get going, we're going to take care of some housekeeping notes. This episode today is sponsored by Epic Mortgage. Whether you're buying, refinancing, or investing, call Epic today. That's 708-905-5300. That's 708-905-5300. It's your dreams, your goals. Let's plan together. Now on with the show. Today we have Ed Gallatin. He has an MBA, he's a CPA and a CTRS, a lifelong resident of the Wabash Valley, is a distinguished professional with extensive academic background and a profound commitment to his community. With a foundation from Indiana State University, including a Bachelor of Science in Political Science in 1980, Bachelor of Science in Accounting in 1996, and a Master's of Business Administration in 1998, Mr. Gallatin imparts wisdom as an accounting and finance educator at Indiana State University and is a sought-after guest speaker on personal finance and tax strategies. Operating under the banner of H. Edward Gallatin CPA, his firm is situated at 18 South 5th Street, Indiana, serving the diverse needs of individuals and small businesses within the Wabash Valley. With a distinguished certification as a certified tax resolution specialist, Mr. Gallatin offers personalized confidential assistance in addressing IRS-related issues, standing in stark contrast to the impersonal promises of national firms. Welcome, Ed Gallatin.
Thank you very much. It's a pleasure to be with you today.
I was almost getting a little tongue-tied right there. My goodness. Can you highlight some of the most significant tax-saving opportunities that, especially real estate investors can take advantage of?
Certainly. Probably the top three that I would say is overlooked is the ability for a cost segregation when they acquire the property. When they sell the property, taking advantage of these Section 1031 exchanges. And also the thing that was really popular since the 2017 Tax Act, but it's slowly going away, is this bonus depreciation. Cost segregation, as you know, if you purchase real estate, especially in the commercial space, we have 39 years to recapture our investment. Well, there's so many things in that building that's not going to last 39 years. And the IRS will allow us to separate that out. A lot of folks don't, and they're depreciating things like, try to think of some things. Their air conditioning, their heating units, cabinets, carpet, things that is not going to last 39 years. We can segregate that out. And then we can use accelerated depreciation on those assets. And many times they're even eligible for Section 179 or what we call bonus depreciation, where we can take it. Well, for a 24, bonus depreciation is 60% of the asset. So, you take a heating and air conditioning unit that's on a commercial building, maybe $30,000. We can take 60% of that off in the year that you acquired the property.
Wow.
As well as the addition. But it's often overlooked.
And that's coming from the CPA, obviously. They should know that. But, I think the consumer, and that's the reason why I wanted to have you on, is to be aware of some of these things. So, it's really a partnership. Sometimes a consumer like myself will want to just go to the accountant and say, here you go, and not know what's going on. And I think there has to be a check of balances, so to speak.
Exactly. And also who you choose to be your CPA. Many of them are what I call reactive CPAs. Those is where you say you come in at the end of the year, you got your books tallied, they put the numbers in the right spot, keep you in compliance, keep you out of trouble. And I'm not saying that's a bad thing, but I take a more proactive. I have a smaller clientele. I kind of think of myself as a boutique, and I specialize in, I say 50-60% of my customers are in real estate in one form or another. Mm-hmm. And I gathered an expertise in that. And I like to take what we call a proactive approach to tax preparation, where we're not only looking at what you did last year, but what we're going to do this year, and what are we going to do? What are your plans 5 years down the and take that approach. And I think that is a far more successful partnership with your CPA if you're able to do that.
Hey, Dante. Is home insurance required?
The answer is yes. Home insurance is required on all transactions. We want to make sure that the house is insured in case of any major accidents. Have a great day. How often do you recommend someone, sit down with their CPA and talk to them?
I would prefer once a quarter, but try to get some of these folks in. And I always say, well, at least let's meet around the September, October at the minimum. And that gives us 3 months to do something. When you come in January and February with your receipts, and all we can do is see missed opportunities. Let's talk beforehand where we have time to act.
I like that. What are some misconceptions, surrounding real estate investing and, with your clients? Like what are they missing sometimes, the opportunities that you were speaking of?
I think the biggest thing is cost segregation. And even the ones who are aware of what cost segregation is, they think, well, I don't own a big office complex. I don't own a mall. You can use this on your residential rents. And I think that is highly overlooked. And great tax savings. Even your residential, they're not 39 like your cost recovery is what I'm talking about.
Right.
39 years. It's only 27 and a half, but still that's a long time to recover your cost on an investment. So even on a single home residential, we can use cost segregation. Now, obviously, you're not going to be able to go out and hire one of these cost segregation firms to do the analysis. Those are going to cost you anywhere between $30,000, $15,000. But it doesn't take a genius to sit down and figure out, well, what would it cost me to replace my air conditioning and heating? What would it cost me to replace all my carpet? What would it cost me to replace cabinets and things like that? And we could pull those out in a cost segregation and save you a lot of money.
Definitely. And can you unpack the 1031 exchange? I know there's a lot of kind of misconceptions on exactly when does that come into play versus, when it doesn't.
I tell you, if you're the long game player in real estate, the 1031 exchange is probably the best thing for generating what I call generational wealth. It is just perfect for that. Basically, what the 1031 exchange is your ability to defer any capital gains on an exchange of real estate. With the Tax Act of 2017, 1031s are limited to real estate transactions now only. Used to be either any tangible asset you could do that with. But with the Tax Act of 2017, we are relegated just to real estate. But what it is basically I can go ahead and let's say I have a residential home and it's appreciated. I've had it for 10 or 12 years. It's appreciated considerably. If I just sell it, I would have capital gains tax on it, right?
Mm-hmm.
Well, if I get involved in a 1031 exchange, what I'm going to do is I'm going to find another piece of property to invest in, hopefully a larger or bigger piece of property. This is a way you can kind of snowball your real estate investment is through these 1031s. And I don't have to pay that capital gains tax. It's deferred. And what I say, it's great for generational wealth. Let's say that a gentleman starts, let's say in their mid 30s or 40s, and you keep snowballing this and you keep possession of these. Then when you pass it to your heirs, they get what's called stepped up basis, and all those capital gains disappear and they start out at zero. I mean, it's just a beautiful. Now the thing is, you got to watch out for these Section 1031s, and I highly suggest that you get what's called a qualified intermediary to work with you. And this is an expert, and also they hold the funds. There's some rules involved in the 1031, and they're very strict. If you break these rules, the exchange is over. And one of the biggest one is you got 45 days to identify a piece of property that you want to purchase with the receipts that you get from your sale. Then you have 180 days in which to close that deal. So you can go out and pick 3 to 5 properties and then negotiate your best deal, but you got to do it within that 180 days.
Hey, Dante, should I go with a broker or a bank?
Ooh, very good question. Obviously, I'm a little biased on this. I would say you always want to go with a mortgage broker. We shop around for the best deal for you. We have different banks and lenders that we work with. But at the end of the day, you want to go with someone that you trust and you feel comfortable with. Have a great day. And is this... and I know the answer, but I just want to make sure everyone knows, is this just strictly for investment properties, or can this be construed for primary residences if I'm selling? And
it's absolutely for property that is involved in trade or business or investment. We can add investment also, but no, you cannot do that with a personal residence. Of course, then with your personal residence, unless you have a McMansion, where and you're married, you still have that. If you live in the house 2 years out of 5, you don't have capital gains on it. Or that first one is at 500,000 of capital gains. And that kind of helps there. So
yeah, a little bit. Definitely. Now, as far as just, some success stories that you've had, obviously, just when you come in, someone's like, hey, have you seen tax savings? What some stories come from that?
Yeah, just it's been a little bit ago. It was probably a year ago, maybe 18 months. A gentleman bought an apartment complex with had 12 units in it. And, and he came in and he had no idea what cost segregation was. And when I explained that to him, not only were we able to, save him a ton of money on his investment there, we were able to create a loss to help offset some of his other income. So, he was a very happy camper at the end of that.
I bet he was.
So those are kind of those things, yeah.
Yeah, no, I mean, definitely, obviously, once you start accumulating some success in real estate investing, once you start accumulating properties and you're making some money, the next worrisome thing is taxes, and
right.
And to strategize how you can work the taxes in your favor. And, obviously legally, but, is obviously what we need to do.
A lot of people get very upset when, I get some wealthy clients that pay little or no tax, but we're just following the tax laws. We didn't write them.
Right.
So don't get mad at us, write your congressman. But real estate is one of the most fabulous things. Another thing I want to mention while we're talking about, you talk about hidden gems that most people don't realize. And unfortunately, many CPAs that aren't in the real estate wheelhouse fail to do this because either they don't remember or never knew. If you're let's say you have 5 residential homes that you rent. Okay. And you, through depreciation and bonus depreciation, you create some capital loss or some losses. Okay. If your AGI is over $150,000, normally those losses are suspended. You'll get them eventually, but while your AGI is up over 150, they're suspended. What most people don't realize is if you document all the hours that you spend on your real estate ventures, and if it's over $750, 750 hours, and you document this, you become and you don't have to have a license, but you're considered a real estate professional. And if you're a real estate professional, those AGI limitations don't affect you.
Wow.
And you're liable to take your entire losses. And also, what a lot of people don't realize is that you don't personally have to put in the 750 hours. If let's say that you have maintenance people and you supervise them, those hours count. If you have contractors coming in and doing work and you supervise it, those hours count. But the key there is to document that 750 hours, become a real estate professional, and then you don't have to worry about these losses being suspended because of your AGI.
Wow, that's great stuff. I did not know that. A banker, a mortgage broker, an attorney, a realtor, and an accountant are just a few professionals that you'll need their services sometime in your life. We all need a financial team. We all need professional partners that provide information so we can make informed decisions about our life and the things that matter the most to us. I'm willing to be a part of your financial team. I'm here for you. I'm just a call, Zoom meet, a direct message, or a text message away from working with you. So what questions do you have for me? It was funny, a certified tax resolution specialist.
Yes.
What is the difference between, CTRS, EA, CPA? What are the different designations?
Well, there's three classes of folks that can represent you in front of the IRS. One is attorneys, one is the CPA, and one is the enrolled agent or the EA or the EI. My lips aren't working this morning.
It's okay.
The enrolled agent. Yeah. And any one of those can represent you in front of the Internal Revenue Service. Next is, what is their level of expertise? Well, as far as tax law, attorneys and CPAs and EA enrolled agents are pretty much, depending on the individual, but knowledge-wise should be about equal. Now, where you get into, should I have a tax attorney? Should I have a CPA? Should I have an EA? Depends on the level of service you need. If you're doing estate planning with your real estate and things like that, I would suggest that you go to a tax attorney. If you're trying to build your business and you're looking at the business aspect of it, I would go with a CPA. Because not only are we experts in tax, but also experts in business in general. Okay. Myself, we have 150 hours of college. So you can either double major or go on and get your master's. I opted to go ahead and get my master's degree.
Sure.
So I got my 150 hours so I could be a certified public accountant. But there we got a broader background in business to where we can advise our business clients. EAs, they are mostly just in tax. So if you have tax issues, an EA may be the direction you want to go. But that's the level of services. Now, my certification in tax resolution, that means in the CPA space, I have a niche to where I specialize in helping people who have tax problems with the IRS. And I take specialized training, specialized courses to help that. I belong to different organizations that I network with. If I come up with a situation to where, I might need some advice from somebody else that may have had a client in a similar situation, I can pick up and phone several different folks and get their input as well. So if you have tax problems, that is a designation that you might want to look for.
As a regional mortgage broker licensed in 9 states, this gives me the opportunity to work in different areas of the country, give me better insight in the challenges that so many first-time home buyers and investors face. I'm here to help. At Epic Mortgage, it's your dreams, it's your goals. So let's plan together. Have an epic day. No, I appreciate that. It's so many Campbell soup alphabet
Oh yeah,
being
yeah.
thrown out. And so I'm just trying to figure out like who is the highest designation? Who should I be speaking to? And like you said, it's really from a consumer perspective, we really need to start interviewing different CPAs based on their experience levels and what they specialize in, because it's, CPA, based on what you're saying, is very broad.
Very
And
broad.
and
Yes.
they may not have experience in what I may be focused on and doing. And so they can fill in the blanks, but they're not always being proactive and helping me put myself in the best position possible.
Correct. Like on depreciation schedules, there's 2 or 3 different ways you could depreciate property.
Mm.
Which is the best for you? What are your long term? And for me to make that decision, what are your goals? So those are kind of things that go into a good working relationship. If I was a small businessman, I would not seek out a CPA that is just buried doing tax work. It does, I know some of my close friends that they'll personally do maybe 1,000 or 1,500 returns in 8 weeks. During a tax season, I consider a busy tax season if I do 200 returns.
Wow. Because of the time, the care
Yes,
for that client.
exactly.
I get it.
When you're doing 1,500 returns, you're not spending a lot of time on each return.
No.
You're taking the information, they're properly put it in the proper boxes, but they're not doing a lot of what if scenarios like I did.
Right.
And try to find the best solution for the client.
It's more fast food. Just spit them out.
Yeah, you got it. You got it.
What proactive measures would you recommend, people to handle, like to mitigate, just personal tax liability? What type of measures or things that you can kind of nuggets you could give us today?
One of the biggest issues I have with clients is what we call the non-filers, and how a person becomes a non-filer. I don't judge people, and that's the first thing. Usually, I say most of my non-filer clients had some type of life event in 1 year where they didn't file their taxes because they didn't, they had bigger things to worry about. A serious illness, a death in the family, a divorce, things like that. Okay. Then the first year they didn't file. Now the second year they get a little scared because they didn't file the year before and put it out of their mind. And before you know it, they might be 6 years in arrears on even filing their taxes. And the sad part about it is I've had many cases where they come in where they had refunds due. Well, the IRS only refunds for 3 years. Then you forfeit those refunds. I've had a lot of people leave tens of thousands of dollars on the table just because they didn't file.
Mm.
It's sad, but that's the reality of it.
Yeah. No, you got to file. Definitely got to file.
You got to file. And a lot of people don't realize that, it is a crime if you don't file. It's a federal misdemeanor, by the way.
Yeah.
I've never seen anybody prosecuted that wasn't involved in fraud over it.
Sure.
But it doesn't mean they can't.
Right. It's always on the table.
It's always on the table.
My biggest thing on taxes or just in general is like, if you don't know the rules, then you have to work with someone that does.
Exactly.
And that's the key. And, and it is about the betterment of yourself personally and your business. The health is based on your tax liabilities. And so if someone like yourself can help, that's a great thing. That is a great thing. So where can people find you, Ed? What's your contact info?
Oh, okay. Well, I'm located in Terre Haute, Indiana. And for those who don't know where Terre Haute, Indiana is, if you were ever a basketball fan, you probably heard of a gentleman named Larry Bird.
Sycamore.
That's Terre Haute, Indiana, which is going to be the home of the Larry Bird Museum, which is going to open up this summer.
Wow. That's awesome. I did not know that.
Yeah. Yeah. Right. Actually, it's going to be about 4 blocks from my office. The museum.
Man. Well, I'm going to have to stop by.
I'm located in downtown Terre Haute, just right off Wabash Avenue, 18 South 5th Street. I can be reached at area code 812-233-3989, or go to my website, hegtaxrelief.com. And there's a calendar there where you can just book your own appointment at your leisure. And I'd be happy to talk to anybody that has a tax problem or just wants to talk real estate.
That's awesome. And it's been a pleasure. I appreciate all that knowledge you gave to us. And I want you to have an epic day.
Hey, appreciate it. Thank you very much.
That have chosen a path. The who's, the whys, and the hows are being shared